Hello everyone and welcome back to our weekly educational videos. So today our topic will be what is technical analysis. But before starting our webinar, we would like to read this disclaimer. So the information provided in this webinar is for educational purposes only. So please do not take them as a financial advice. Do your own research before start trading. So this is the topic, Introduction to Technical Analysis. We will talk about the definition, what is technical analysis. We will see what is fundamental versus technical analysis. We will see the difference. We'll talk about the assumptions behind technical analysis, and after we will make a quick introduction about trends, pattern, and indicators. So what is technical analysis? Technical analysis is the use of historical price movement to predict future price trajectory. So how you will use technical analysis, what you will do is you will search for repetitive pattern that shows a certain movement of a price, and then you will wait for them in the current period to apply them to know how most probably the market will move. So if we look at the picture below, we have this pattern in blue, which is a bullish flag, and it is known that after a bullish flag, the market will continue after the breakout to the upside. Why we know this? Because we have seen a lot of these bullish flags in the historical data, and it shows us after the breakout, they will continue the move to the upside. Okay, so this is in brief and summary what is technical analysis. You will benefit from repetitive pattern to come up with trading ideas that have high probability of success. What is the difference between technical and fundamental analysis? When it comes to technical analysis, there are two ways to trade the market. There are many ways, but the most two common ways are technical and fundamental analysis. Technical analysis, you will use the charts, indicators, oscillators, the pattern that we have talked about, and then you come up with a trading idea. However, in fundamental analysis, if we're talking about stock, what you will do is you will measure the intrinsic value of a stock or share, and then you come up with a trading idea whether the share is undervalued or overvalued, then you buy or short the current price. In currencies, what you do is you analyze the macroeconomics of a certain country to come up with an idea how its currency might move in the future. In fundamental analysis, also there are relevant news events such as GDP reports, unemployment rates, and etc. that can give you insights of how most probably the market will move. Another example of relevant news we can talk about lately, let's say the tweets of Elon Musk or Donald Trump that have huge impact on the market. Okay, so you can benefit from these news to come up with a trading idea. Assumptions behind technical analysis. We have three of them. Market discounts everything, price moves in trend, and we have the last one, patterns are repetitive. What I mean by market discounts everything. The current market price, if you look on any chart, the current market price reflects the unknown and known information that might affect a certain price. So this price shows the agreed price by all participants in the financial market. So whenever there is a news, you will see that the market will reflect this news by moving in a certain way. Okay, so market always discounts, use certain event. You will see these events will be reflected in the price chart, and this is why technical analysis works. So technical analysts don't look at the news, don't use fundamental analysis, they just rely on the price action or price movement to come up with a trading idea. They assume that any event or news will be reflected on the price, so they trade based on just price movement. That doesn't mean you cannot just rely on fundamental analysis to come up with trading idea. So you can be either a technical analyst or a fundamental analyst by relying on the news, or maybe using both of them, fundamental and technical analysis, to come up with trading ideas. Price moves in trends. So here we are going to talk about that the price has two different ways to move, either to the uptrend or a downtrend if the market is trending. The third way, you can see that the market could move in a sideways market. So these are the price movement that you can expect from a certain security. Patterns are repetitive. We have talked about this. So by going to the historical data, search for a certain patterns, they might help you to come up with trading ideas in the future. So what is an uptrend? An uptrend, or how do you recognize an uptrend? What are the traits of an uptrend? You will see on an uptrend, the market is posting higher highs and higher lows. You can see that the market is posting big bullish bodied bars. You will see the market posting distant swing highs and lows as well. Okay? And also if you are using moving average, and the most common moving average for direction is 200. If you're using the 200 moving average, you should see the price above it. Okay, let me give you an example what I am talking about when it comes to an uptrend. So here we have the USD/JPY. If you look at this market, I highlighted the big bodied bullish bar. So this is an indication that we are in an upward movement, because the bearish one, which are the black, they are small comparing to the white ones, which are the bullish ones. So this is an indication that we are in an uptrend. Another indication is that the market is posting higher lows and higher highs. So if this is a low here, this is a higher low, a higher low, higher low. So the market is moving to the upside. Another indication, which is higher high, which is if this is a high, this is a higher high, higher high. The market manages to break every time the previous high. Okay, so in another word, the buyers are in clear control of the market because every time they can break the previous high. So we are in an uptrend. Okay, and if you would like to plot a moving average, is if I put the moving average to 100, which is already in default here, this is the moving average to 100. You can see that the market is above it, which shows that we are in an uptrend. So this is a third way to look if we are in an uptrend or not. Also, you can use trend line. So if I plot the trend line like this, you can see that the market is always above this trend line. So we are in an uptrend. A good way to plot your trend line is to use 2 swing lows is more than enough. Then you will see how the market is respecting it. So by plotting or linking 2 swing lows, then you can draw a trend line, and this is respect. Now if we're talking about a downtrend, let's continue. In a downtrend, you should see the market moves from the upper left to the lower right. Okay, so you will notice lower highs and lower lows, the opposite of the uptrend, big bearish bodied bars here, and distant swing highs and lows that moving to the downside, and the moving average should be below, the price should be below the moving average and the trend lines. Let me give you a small example. If we go here, the market is in a clear downward movement. It's easy to know now, since you know the traits of a downtrend. We have big bearish bodied bar. This is one here. You can see if this is a huge one here. Another one, if we look at this area, so the market is clearly moving to the downside. Okay, forget about this part here because the market is about to move higher. Okay, it's not confirmed that the market is trying to move or reverse to the upside, but till this area here, 8 June, the market of USD CAD is moving to the downside. We have big bearish bodied bars. We have higher lows. Here you can see it. Sorry, higher, lower highs. This is high, this is lower high, and this is lower high. If we're talking about lows, this is a low, 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 low. And the lows are distant from each other. So look how much there is a distance from here to here. Okay, and as you can notice, when the market started to post close swing lows, so the distance is getting closer, you can see how the market is starting to move to the upside. So this is a bad or red flag for sellers because we have a close swing lows. That means the market is getting overwhelmed by buyers. Also, you can plot your moving average. So the market is respecting this moving average. I linked these two highs, 1, 2. Even this went a little bit outside, then it went back to the inside or below the trend line. If I plot the moving average here, you will see that it will be most probably below it. So the 201, you can see that the 200 moving average is to the upside and the price is below it. So these are 3 different ways to look at the market to know whether you are in an uptrend or a downtrend, higher highs or higher lows. It depends. Trend line, moving average, and the formation of the bar. So 4 of them. So look here, if you compare them to the bearish to the bullish one, they are much bigger. Continuing with intro to patterns, there are 2 types of patterns. We have the continuation and the reversal patterns. So the continuation patterns, what it helps you how it helps you in your trading. After a continuation pattern, so if you have a flag, you should expect that the market will continue in the main direction of the trend. So if you have an uptrend and then the market formed a kind of a wedge or pennant or a flag, after the breakout of this pattern, you should expect that the market will move in the same direction of the main trend. Okay, this is most probably. A reversal pattern is the opposite. So if the market is moving to the upside and then you face a double top, let's say, you should expect that the market will reverse and move to the downside. However, if you are in a downtrend and you faced a double bottom, at the bottom of this downtrend, you should expect a reversal and a move to the upside. Let me give you an example on MT4. So here in USD JPY, let me remove this and remove the indicators as well. This is how you can remove it. So if the market here is moving to the upside, this is called as a pennant. When the market managed to break this pennant to the upside, the market moves to the upside. So we have impulse correction in the form of a wedge. Once we have a breakout, the market moves to the upside. So this is a continuation pattern. So these patterns repeat themselves in the future, so you can benefit from them to build your trading ideas. This is why we use repetitive patterns. Now, a reversal pattern, I will give you an example here. If we look at GBP USD, we have an uptrend, higher highs, higher lows, and then the market posted a double top. So we have a double top here. You can see we have 2 tops. Well, the market failed to break the previous high. This is the real meaning behind the double top. Okay, so the buyers could not break the previous high or this horizontal line, the red one. Once the market failed to break this line or the swing high, it reverses. We call this as a double top. Remember that trading is all about a fight between sellers and buyers. However, when this fight, they will rule the market. So if the sellers are in control, the market will go down. If the buyers are in control, the market will move up. However, when there is indecision or nobody is in charge of the market, you will see the market moving in sideways, similar to here. Okay, you can see that the market is in a sideways movement. There is an indecision in the market. We call this. Continuing to the intro to indicators. We have two types of indicators, the overlays and underlays. What's the difference? The overlays are indicators that they will be on top of the chart. I will give you some example. The underlays, they will be separated from the price chart. Let's go to NT4 to show you briefly what they are. We have talked about moving average. If I need to give you an example here, this is the moving average. You can see that this is an overlay indicator because the indicator is on the chart price. Okay, so you use these indicators to come up with trading ideas. You will use the combination of them. You cannot just rely on one indicator, let's say moving average, to come up with trading idea. Okay, but also don't use many of them because you will end up with a confusion. So 3 of them is more than enough to come up with a strategy, and then you will come up with trading ideas. Okay, this is moving average. You can use Fibonacci if you would like. This is Fibonacci. Also, it's an overlay indicator. It's on the top of the chart. Here you can change the color if you cannot see them, because I cannot see them honestly. Sorry, I changed the trend line. I should fit level here should be okay. So you can use the Fibonacci. We will not dig deep into how to use these indicators because later in our next videos we will show you how to use them in details. For now, it's just an introduction about these indicators. So you can use Fibonacci, moving average, as well as the underlays. Let me show you how the underlays looks like. You go here as well, indicators, and then you will pick an RSI or MACD. They are in the oscillator. So let's say I picked the RSI. You can see that the market, the chart, it is split between the indicator and the price chart, and this is why they are called the underlays. Okay, so you will use maybe the RSI, combining it with Fibonacci and moving average to come up with trading ideas. So this is it when it comes to what is technical analysis. A quick introduction to the definition. We talked about the patterns, fundamental analysis, indicators, and many other things. If you have any question, please let us know in the chat so I can answer them. Okay, this is it for today. Thanks for attending and have a lovely day.